Did you know millions of Americans legally overpay taxes every single year? And some of them miss deductions worth hundreds or even thousands of dollars. If you're filing taxes, working a side hustle, owning a home, or even donating old clothes, you could be leaving money on the table without realizing it. Today, I'm breaking down 12 tax deductions that many people completely overlook. And trust me, some of these might surprise you. Let's get into it. Hi, I'm Tara. I drink coffee, read tax forms so you don't have to, and help people keep more of their hard-earned money. Remember, deductions don't give you free money. They reduce your taxable income, which can lower the amount of tax you owe. Now let's look at 12 deductions people commonly miss. Point 1. State sales tax deduction. Most people know about deducting state income taxes. But if you live in a state with little or no income tax, you may be able to deduct state sales taxes instead. This can be especially valuable if you made a large purchase during the year, like a car, boat, or major home appliance. Many taxpayers never even check this option. Point 2. Student loan interest. Even if you're not itemizing deductions, you may still qualify to deduct student loan interest. You can potentially deduct up to $2,500 of qualifying interest paid during the year. And here's the important part. Many people assume they make too much money or forget about loans they're actively repaying. Always check before skipping it. Point 3. Job search expenses for self-employed workers. If you're self-employed and spend money finding clients or growing your business, some of those costs may be deductible. Think about portfolio websites, business networking events, marketing materials, professional memberships. If the expense helps generate business income, keep records. Point 4. Home office deduction. This one is famous, but many people avoid it because they're afraid it will trigger an audit. For most taxpayers, that's simply not true. If you're self-employed and regularly use part of your home exclusively for business, you may qualify. That spare room, office corner, or dedicated workspace could help reduce your tax bill. Point 5. Charitable donations. Most people think only cash donations count. Not true. You may also be able to deduct clothing donations, household items, furniture, electronics. The key is keeping proper records and receipts. That bag of clothes sitting in your garage might actually have tax value. Point 6. Health savings account contributions. If you contribute to an HSA, you're getting one of the most powerful tax advantages available. Your contributions may reduce taxable income. The money can grow tax-free, and qualified medical withdrawals can also be tax-free. That's what many experts call a triple tax advantage. Yet millions of eligible Americans never use one. Point 7. Self-employment health insurance. If you're self-employed and paying for your own health insurance, don't overlook this deduction. Premiums for medical, dental, and certain long-term care insurance may qualify. Many freelancers and small business owners miss this every year. Point 8. Retirement contributions. Contributing to certain retirement accounts may lower your taxable income. Depending on your situation, accounts like traditional IRAs or self-employed retirement plans may provide tax benefits today while helping your future self. You're basically saving for retirement and potentially reducing taxes at the same time. Not a bad deal. Point 9. Business mileage. This is one of the most forgotten deductions. If you're self-employed and use your vehicle for business purposes, mileage can add up fast. Client meetings, business errands, travel between work locations. Track your miles throughout the year. Waiting until tax season and trying to remember everything rarely works. Trust me. Point 10. Education and training expenses. Did you pay for courses, certifications, workshops, or training related to your current profession? Those expenses may qualify as business deductions. If you're self-employed, improving your skills could potentially reduce your taxes while increasing your income. That's a win-win. Point 11. Bank fees and business software. Business bank account fees. accounting software, cloud storage, website hosting, subscription tools. These small expenses often get ignored because individually they don't seem important, but together they can become meaningful deductions. The IRS doesn't care whether an expense is glamorous. It cares whether it's legitimate. Point 1-2. Tax preparation fees for your business. Many business owners pay professionals to help prepare taxes or handle bookkeeping. Those costs are often deductible business expenses. In other words, paying someone to help manage your taxes could potentially help lower your taxes. Tax rules have a sense of humor sometimes. Let's recap. The 12 commonly missed deductions are state sales tax, student loan interest, business-related job search expenses, home office, charitable donations, HSA contributions, self-employed health insurance, retirement contributions, business mileage, education and training, bank fees and software, tax preparation expenses. The biggest mistake isn't forgetting one deduction. It's failing to keep records throughout the year. Receipts, mileage logs, donation records. Those simple habits can make tax season dramatically easier.